Good morning, everyone, and thanks for joining us this morning. We're delighted to have so many of you tuning in. We're just going to give people a little bit of time just to join, just to get a chance to log in, and then we'll kick off. So I think we have everyone tuned in now. So I just want to say good morning to everyone and welcome to this event, which is in the form of a panel discussion, where we will be discussing the new route to the industry recognised RPA or Retirement Planning Advisor designation. My name is Eva Lavin and I'm Head of Education in LIA, and I'm delighted to be joined here this morning by our course lecturer, James Skean, and Anya McGroarty, who is a CFP professional and also holds the RPA designation. For anyone considering obtaining the RPA designation, this course will enhance your technical knowledge of pensions, whether you are working in an advisor or administration role. And gaining the RPA designation means you will join an elite group of over 1,600 RPA pension specialists already working in Ireland. As we go through the discussion, I would encourage you to use the Q&A box at the bottom of the screen. And if you have any questions for myself or the panelists, we will set some time aside at the end to go through these. So just in terms of what we'll be discussing, I will talk through a high-level overview of the course structure, covering how it is delivered, the assessment structure and entry requirements. Then James will give us an insight into the course content and what new knowledge and skills a student can expect to walk away from the course with. After this, then I will ask Anya for her insights into the value and benefit she has gained by being part of an elite group of RPA professionals. And finally, we will take some time at the end to go through any questions that have come through. So I suppose, as mentioned, this is a new route to the RPA designation. It's a one-module course called Retirement Planning. It's placed at level 9 on the National Framework of Qualification. So upon completion, as well as obtaining the RPA designation, you will also get a taster for LIA's Postgraduate Diploma in Financial Planning programme, should you wish to continue your studies, as retirement planning is one of the 6 modules on that programme. Lectures will be delivered over a 12-week period, and this course will be delivered twice a year, so in September and February. So the September course will run from September to December, and the February course then will run from February to May. The September lectures will be delivered on Tuesday evenings from 6 to 8:30, and the February lectures will be delivered on Wednesday evenings from 6 to 8:30. All lectures will be delivered online and they are recorded, so I suppose there's no geographical barrier for anyone who wants to complete this course. In terms of then assessment, so students are assessed by a combination of examination and continuous assessment. So there'll be 2 continuous assessment exams and they each account for 25% of the overall mark. And then there's an end of module exam worth 50%. So the continuous assessment element is a great way for students to pick up marks, I suppose, towards their final grade. And then the overall then pass mark for the module is 40%. The registration fee is €1,100, and we're currently open for registrations at the moment for the September intake, and then the close off will be the 26th of August. There are certain, I suppose, entry requirements to this course, and on screen you'll see we split them into 2 entry routes. So if you have a relevant 2-2 honours degree, and I suppose when I say relevant, it's a qualification in the area of business, finance, or a numerate discipline like maths, physics, or engineering, or the other entry route is if you hold any of the professional qualifications you see on screen. As mentioned, this is a new route to the RPA designation, and some of you might be familiar with the level 7 route via the Certificate in Retirement Planning Advice programme. But that route will only be offered until September 2023. And then after this point, this level 9 course will be the only route available to those who wish to obtain the RPA designation. So I'm now going to hand you over to the course lecturer, James Skean, who has more than 40 years of pension industry experience. He has worked in both insurance companies and brokerages, and James was head of pensions with New Ireland Assurance for more than 20 years. He also headed up General Investment Trust, the trustee subsidiary company of New Ireland, for more than a decade. And James currently acts as an independent professional trustee who advises employers and trustees on pension matters. So, James, thank you for being here today. We've had, I suppose, like a lot of interest in this course. So, I suppose, would you be able to maybe give us an insight into, the overview of the content that potential students can expect to cover over the 12 weeks?
Yeah, sure. Thanks, Eva, and good morning, everybody. Believe it or not, it's now actually 45 years in the pensions. But yeah, I'm delighted to be a lecturer on the retirement planning module, and I look forward to working with students from September onwards. As I say, 45 years in the industry, but to be perfectly honest, if I go back and look at the last 12 to 18 months, the changes and the developments in the industry trump the entire previous 40 years. Massive changes in the industry. And I think that underlines hugely the need for advice to be given to clients, whether that client is a business owner, an individual employee, or in fact an employer. And the objective of the course is to give advisors the necessary skills and knowledge to be able to give that advice to their clients on an ongoing basis. So the module is split into 3 terms. So in the first term, we'll cover 3 particular topics, starting off with the state pension. State pension is crucially important because, for a large number of people, it will be their only source of income. And for others, it will be an important building block as part of their overall retirement benefit package, if you like. Interestingly enough, there's been a huge interest or focus on the retirement age over the last, probably since the general election. And we seem now to have kind of got a final date that it's going to stay at 66. There was moves to, push it out to 68 at some stage. So now that it's set, or seems to be set at 66, we need to look at what's the impact of that for individuals, one, qualifying for the state pension, but also how it will interact with how people retire from employment, and also how they will draw benefits from their own private pension arrangements. Second area we'll look at is individuals and how they will plan for retirement. And this will cover, sole traders and partners, proprietary directors, employees, both in the private sector and the public sector. And I suppose the main focus in this particular segment is proprietary directors. And it's, I suppose, the first mention of the dreaded IORP word, which came in April 2021. And funny enough, when IORP first came into being, the main focus in relation to, proprietary directors was the investment restrictions. So new one-member arrangements or new investments for existing OMAs, had to invest in regulated markets. There was restrictions on property, etc. But then we got a bolt out of the blue a couple of weeks ago from the Pensions Authority, who basically said that in their view, the new pensions that were being set up for directors, insured plans, small self-administered plans, would not meet the compliance requirements of IORP. Following that, pretty much the whole market, or nearly the whole market for individual occupational pension schemes has stopped. No companies are taking on new business, or virtually no companies are taking on new business. And one of the challenges within the lecture is to look at, what's the impact of that and what possible solutions can we look at for our proprietary director clients. The third element within the first term is retirement options. What options are available to individuals, and what's the best option depending on the individual circumstances. I suppose really, experience has shown that the retirement lump sum, the better retirement lump sum tends to drive a person in a particular way as to whether they go down the ARF route or the annuity route. But we will look at the characteristics of each of these products and the pros and cons of each. It's interesting, one of the issues with annuities is the timing risk, because the annuity you get depends on the day you buy the annuity. And if you were buying an annuity on the 1st of July as opposed to the 1st of January this year, you'll get about 26% more for your annuity than if you bought on the 1st of January. So it just highlights this, timing risk. And in fact, risk is sort of a constant theme throughout the whole module in terms of investment planning, etc. When we look at the ARF, you know, certainly people seem to be drawn to the ARF wherever possible. They like the, you know, the management of their own money, etc. But it is not without risks and challenges. And bearing in mind, you know, quite a number of older people are going to go into the vulnerable risk category. So, you know, a couple of things. Advice, ongoing advice is absolutely crucial. With an annuity, you know, you can literally walk away because the deal is done on the day. But the ARF requires ongoing advice. And, you know, we need to look at issues such as investment volatility and issues such as sequence risk in assessing the ARF product as a retirement vehicle. And as I say, again, can't stress highly enough the need for ongoing advice. That will bring us up to our first in-class assessment, and then onto the second term. So for the second term, we'll start off looking at leaving service options. So when an individual leaves service, you know, do they leave their pension pot where they are, or do they transfer it out to a different arrangement? There's no simple or easy answer. You know, much depends on the product they're in at the moment and the product they're thinking of going to, the relative charges that apply to each, but also the risks that are built into each. And I think in particular, if you're advising an individual who is in a defined benefit scheme or has a paid up benefit in a defined benefit scheme, it's a double-edged sword. On the one hand, you have the guarantee, but the guarantee is only as good as the person or company that's providing the guarantee. You know, so we'll certainly look at that quite closely. I think an interesting statistic, if you look at group pension schemes in Ireland, 1/3 of the members are actually deferred members. Whether that's by accident, design, or probably in a lot of cases simply apathy, it does indicate that a lot of people simply leave the pot there, and maybe that's through lack of advice or the lack of right advice. So again, you know, we will look at that. The second issue we will look at in the term is charges. And we will look at, you know, the impact of charges, the different types of charges. And what I mean by that is both the explicit charges, such as the management fee, policy fee, etc., but also increasingly there's a focus on implicit charges. You know, the charges behind the scenes before the management charge or unit price gets declared, and what adds up to make up what's called the total expense ratio, which is increasingly being used to measure and compare different investment managers. You know, the other issue we will look at is quantifying the retirement needs of individuals. We need to work out, you know, what is their objective in retirement. In a lot of cases, that might be, say, 50% of the pre-retirement salary. And we need to look at, you know, do we consider gross salary or net salary and the different taxation implications that will apply and lower tax that will apply in retirement. What that objective is compared to what they have at the moment, and in particular, how we can actually go and bridge that gap. Just getting back to charges for a minute, we'll also look at how to compare different pension products, because one might have, say, a fixed charge, the other, say, like a PRSA, can't have a fixed charge, it'll only be a percentage charge. So we will look at measures such as the reduction in yield so that we can identify and compare charges on a like-for-like basis. I'm taking a break for the third lecture in the second term, and that will be given by Tony Gilhawley, who has a wealth of experience in pensions, and in fact, I think has been in the pensions industry even longer than I have. So Tony will talk about pension limits, but we'll also talk about pension adjustment orders. Pension adjustment orders are becoming increasingly common in the industry because of the number of marriage and partnership breakdowns. And, you know, in a lot of cases, the pension asset is typically or frequently can be the second biggest asset after the family home. And that can, you know, be dragged in and either assessed separately or brought into equation and sharing out the spoils as part of a divorce or a legal separation. After the second in-class assessment, you know, we'll change the focus somewhat to the group benefit scenario. And that'll start off with risk benefits. So what we will do, first of all, is look at risk benefits for individuals, but then spend a lot of the lecture on the group risk market. And we look at issues such as free cover limits, if there is underwriting, how that has evolved over the years and how it's become more streamlined. We will look at how risk benefits are costed, and then at claim stage, how disability claims are managed and how we go about paying out lump sum death benefits on the pension schemes, and the whole issue of trustee discretion and deciding to whom the benefits should be paid. The second lecture in the third semester, for want of a better word, is providing pension benefits for employees. And this has become a massive issue as a result of IORP. So whether it's an employer setting up a new scheme for employees, or they have an existing scheme, there's very, very significant challenges that they have to deal with. And the key point is they need advice, and they need advice now, because compliance with IORP must be done for everybody by the end of this year. So the clock is definitely ticking. So, you know, what are the options? First of all, a standalone scheme can basically beef up their government's requirements to meet IORP. But, you know, unless you're a very, very large scheme, I just can't see that happening. And in fact, even the Pensions Authority have said, you know, they want to reduce the number of schemes, which is currently in the group market at about 8,000, down to 200 by the end of 2027. So the writing is on the wall, and existing standalone schemes will need to change. The details or the workings are set out in the Code of Practice, and we will go through the 7 different chapters that are in the Code of Practice. We'll then look closely at the master trust model, which seems for many to be the obvious alternative to the standalone scheme. And that has its own challenges, because in many cases, you know, there's this close connection between the trustees and the administrator. They're effectively sister companies, or they're part of the same group of companies. And that brings conflicts of interest and issues. And in reviewing the performance of master trust providers, there's a key role for the advisor to play, because they can bring independence to the whole scenario. We then look at how does a scheme get into a master trust, and in particular the bulk transfer regulations, which were introduced in 2009, but have been modified and simplified somewhat in 2021. And then finally, as part of that lecture, you know, we will look at the auto-enrollment program, which is scheduled to start in Q1 2024. Investment is hugely interesting, and you know, we will look at the different asset classes, investment volatility, spend a lot of time on the different default options that are used in both PRSAs and group schemes. And last but not least, we'll talk about sustainable investment, which is starting to take, you know, center stage as EU regulations require, but also as it's being demanded by our clients, whether that's individuals, employees, or trustees. Finally, and to wrap up the overall module, we will look at fact finding. How do you go about fact finding? What information do you need to obtain? How do you assess the client's needs, whether that's an individual employee, a business owner, or in fact an employer? And based on that, as a result of that fact finding, how do you go about putting forward a recommendation so that they can reach their objectives? So that's it. That's kind of a whirlwind tour of the module. It's going to be exciting, it's going to be challenging, but it is going to be rewarding. And at the end of the module, I believe you know, students will be armed with the skills and knowledge to bring the information that they've learned in a practical way to give advice to their clients. So looking forward to meeting you in September, and I'll hand back to Eva at this stage. Thank you.
Great. Thanks for that, James. So I think that's given like a really good oversight as to what I suppose potential students can expect. And I think really what makes this course so beneficial is just how practical and relevant it is, which is great. So James is going to stay with us to the end. So if anyone has any questions, please pop them in the Q&A box, and then we'll answer them at the end. So I'm now going to introduce you to Anya McGroarty, who is a very experienced financial planning professional, currently working as a senior financial planning consultant with Acumen and Trust. Anya has a strong history of helping clients identify their financial and life goals and providing solutions and ongoing guidance to help them pursue and reach those goals. And she's very passionate about financial wellness and empowering individuals to make better and more informed choices to achieve, I suppose, their version of financial freedom. So Anya, thanks so much for being here with us today.
Well, thanks for having me, Eva, and thanks for that introduction as well. It's great to be here, and good morning to everyone.
Great. So Anya, I suppose having attained the RPA designation, what do you think are the benefits to someone completing the retirement planning module and ultimately obtaining the RPA designation?
Yeah, I think with the RPA designation and the route to that being now the retirement planning module, which James has just talked everyone through, I think you just have to listen to James to hear the level of material that's being covered. And we work in pensions in particular, we work in a very technical industry. And that requires a very high degree of knowledge and competency in advising clients who look to us for guidance. And in the industry, in the financial planning industry, really the QFA is entry level. It gives people foundations, but to actually get to that next level of knowledge and competency to truly guide clients, I think a course like the retirement planning module and the RPA is invaluable. You know, we can all learn things. There's a wealth of experience we can learn on the job from other professionals that we're working with. But for the majority of people actually sitting and partaking in a structured educational program, and that's really where they're going to get the learning opportunities, and it's really going to kind of sink in and give those skills and to go beyond that and have the skill sets to actually implement them with clients, because as you've touched upon, Eva, it's a very practical course. It's designed to actually implement with clients. It's designed to understand and know how to actually advise clients in the best way possible for them. And I think secondly, one of the major benefits of undertaking the RPA designation is the lecturers. In James is a practitioner, has a wealth of knowledge that both he and Tony are bringing to the table. In terms of both their course material, obviously, but the experience and the real life examples that they can actually give to students, that's invaluable. And so much about pensions, as James has said, you know, I'm nearly 17 years working in the industry as well. In the last 16, 17 months, the changes have been so fundamental that we need to be on top of our game constantly. Clients are looking to us to be on top. So I think what you can learn from lecturers as practitioners is so invaluable. Things like revenue practice that you mightn't get from the book. But also it's really important to say that your classmates are practitioners as well. So, you know, oftentimes there's decades of experience sitting in that classroom, and you can learn as much from some people's questions and the solutions they're looking to for clients as, you know, as some of the material as well, but that really applies the material. So I think there's loads of angles and tidbits that you can learn from other people in the room as well, and that opens the door to a network of professionals that you can have that network long beyond the course as well, because you build relationships with people while you're doing the course too. So I think that's really valuable. Yeah. What I'd also say is, personally for me, the RPA, I've had the RPA designation since, I can't remember when it was introduced, Eva, but since then. And what I've really found on a practical note is, as we were touching upon, you have to be on top of your game. You need to continuously develop, stay on top of what's happening in the industry. And the RPA annual forum, I feel, is one of the technically the most let's say technically focused and the strongest out there in terms of CPD programs. So that I know that's specifically allocated to RPA professionals, and I find that invaluable on an annual basis to go along and kind of see, you know, what's the pitfalls I need to look out for, what's the changing in the industry. So I think that's a very real benefit going forward to people too.
Great, thanks, Anya. And I suppose you probably kind of really already kind of touched on this, but you know, as a senior financial planning consultant, I suppose, like, how do you feel, I suppose, the content and the designation would help, I suppose, when advising clients?
Yeah, I think I probably touched upon some of this, but the practicality means that you can implement it straight away. And for me, because I was already working in the industry, I know some students coming in, it might be new to the pension industry. A lot of people might be working in it as well at the minute as well. For me, it absolutely enhanced my knowledge. It validated things that I knew already, and it built my confidence. And I think that's really crucial as well with advising clients. And I think what's also really quite important is that, you know, whilst there's so much material, we mightn't retain everything in our minds at all times. It's you know, really important to know the questions to ask and know when something sows a seed for you, know when you need to go and refer to someone else. So you can say, okay, you know, I'm going to look into that. I don't actually know the answer to that. And in particular, when you're working with clients, as James has touched upon, leaving service options, people with their retirement planning, they're changing jobs. You meet a client, they could be at any stage of walk in their life. They could have a very complex pension history. There's so many angles. You don't know what the next thing you're going to be presented with. And I think certainly the RPA in the retirement planning module has given me all of those different aspects to build on my knowledge in the industry, and I've been able to implement it with clients. And I think it was very, it could probably apply. Recently, I was speaking to a colleague who's in the middle of doing their grad dip. And what they said to me, their feedback was that the retirement planning module was the first time they were introduced to things like the revenue pensions manual. So those type of things being, knowing what to refer to as well is crucial. And as they said to me as well, it's dangerous to think you know everything when it comes to pensions. So I think certainly it's, as a course, it's one that can be applied to clients straight away.
Great, thanks, Anya. And I suppose finally, I suppose it is a big commitment for people who undertake, an education program, especially when they're trying to balance work and personal life. I suppose, what advice maybe would you give to someone who's maybe considering undertaking the retirement planning module?
Yeah, I'm going to make a full disclosure here and say that I did the retirement planning module in the graduate before I had my kids. So I'm going to say hats off to the parents out there as well who are undertaking. Like anything, it's a big commitment. And I think what people have to be aware of going into it, there's real benefits to be had, but to know that for the period of time that you have your course, that you're going to be carving out some of your personal time. We're all living, busy work lives, busy personal lives. And you need to carve out that time. And my advice would be keep on top of the material, absolutely attend the lectures because they're crucial to everything. Maybe just try and set out some time that's going to work in your own personal life, be that early mornings, late evenings. For me, I worked best if I had a block of time. So I might block book kind of a half day on a Saturday or something where I locked myself into a room. So I think put a structure in place that's going to work in your own family life, and just try and keep on top of that. And then also the thing about the course is, if you are working in the industry, try and apply that material, try and look for examples in your day-to-day work that will actually kind of put real life focus on what's happening on the day-to-day basis in the course as well. So, hopefully, I think it's worthwhile doing, but it's a commitment, and just go into it with your eyes open as well.
Great, that's brilliant. Thanks, Anya. And I suppose thanks for sharing those thoughts. And look, it's great to hear, I suppose, from your own kind of personal experience as well. So I suppose if you would like any more information about the retirement planning course, I'm just going to pop up on screen the details of my colleague. I'm just going to pop these up here now. Yeah, so I suppose, as I said, my colleague Brian Dunphy, he'd be more than happy to discuss the course with you and I suppose answer any kind of further questions that you might have. I suppose in the time that's left, I see that there is a few questions that did come in, so we might just have a look at those now. One of the questions was around continuous assessment, so whether they are, I suppose, written or online. So all the exams are online. As I said, this course is an online course, so there's no geographical barrier for anyone who wants to complete it. What is the duration? The duration is 12 weeks. One of the questions, maybe James, this might be for you, they're asking, will cash flow modelling form part of the course?
Yes. Yeah.
Okay.
There's quite an amount of projections involved and maths, etc.
Brilliant. Okay, great.
Although I'm not a maths expert.
And the other one is, I suppose, is when the lectures actually start. So the September lectures, they're delivered on Tuesday evenings and they'll start on the 6th of September. And then the February term, those lectures will be on Wednesday evenings and they are on the 8th, they start on the 8th of February. I didn't think we have anything else. I know some people are just querying about maybe putting up the slide again about the dates and times and fees. So what we'll do is after this session, we'll email all attendees with a copy and a recording of this session, and we'll also include some additional information about the course. So we'll provide all that afterwards. So I suppose like that really kind of brings us to the end of our panel discussion. I'd just like to thank our panelists again and everyone who tuned in this morning. I hope you found it beneficial. As mentioned, we will contact attendees afterwards, and we would encourage early applications for the September intake. There is a big demand for it, and the cutoff and the deadline for submission of applications is the 26th of August. I suppose we also just have a short survey on completion of this session, so we'd really appreciate your input just to assist us with the future planning of events. So just I want to thank everyone again, and thanks to our panelists for tuning in.